Dr. Moleko, welcome to the show and thank you very much for making the time to be with us this evening.
Thank you so much for having me and a very, very good evening.
Wonderful. As you know, the state president, Mr. Cyril Ramaphosa, will later this evening deliver his most anticipated State of the Nation address. And we also know that this year's State of the Nation address is taking place during an extraordinary time in the history of our democracy, particularly as the global community continues to battle with the COVID-19 pandemic. Now, analysts the world over agree that the COVID-19 pandemic has had a far-reaching impact on the global community's growth and development trajectory. Now, what would you say the impact of the COVID-19 pandemic has been on the South African economy? And most importantly, what would you say is the current state of the South African economy?
So South Africa, on the back of COVID, was already in a technical recession, having experienced prior to our lockdown in March, 2 consecutive quarters of growth contracting. So we saw GDP output actually on the downward trajectory prior to COVID. The lockdown simply accentuated the contraction of economic output, and I'll explain what I mean by that. Secondly, I think what happened with COVID is that we've had significant global slowdown in terms of demand for products, goods, and services, because countries were mainly closing their ports. There was very little economic activity around countries. And so the overall effect is that, generally speaking, across commodities, across raw minerals, across some of the goods that we export, we've seen lower commodity demand up to 75% in some subsectors. Agricultural exports have also drastically reduced, but since lockdown has been opened, that meaning economic activity has resumed, we've begun to see economic activity tick up. There's been a massive drop in household demand because people couldn't move out of their homes, out of their regions or districts. Economic wages have also dropped significantly because SMMEs have shut down, and we've seen a significant contraction up to 90% in subsectors, particularly when there was a hard lockdown of what we in South Africa call level 5. So all of this culminated to the output contracting significantly, but also it has resulted and emanated in the revenue projections for the Revenue Authority contracting by approximately 304 estimated billion for the last financial year. This means our budget deficit widens. This also means that we've had significant job losses, particularly concentrated in the second quarter, where we lost over 2.2 million jobs in that quarter alone. We weren't able to recover that net even in the next quarter when we opened up. And I think we'll see what's going to happen in this quarter now, in the last quarter when results are released. But I think overall, we've seen massive decline in economic output, massive job losses, a very negative economic trajectory in terms of the economic shock effects. Now, on the back of this, South Africa already had more than 10 million people living in poverty. It also had more than 10 million people unemployed, more than 50% of its population in poverty, but also the highest level of inequality. So COVID shock has accentuated the worsening crises from an economic perspective that South Africa finds itself. So South Africa is supposed to now come out of this and deal with not only the historical anomalies, but also the existing exogenous shock that COVID exhibits.
It sounds indeed like a very grim picture, Dr. Moleko. The president has tried to begin to address some of these deep challenges, which are obviously now exacerbated by the COVID-19 pandemic. And you are talking about issues of job losses. We're talking about an unequal society. This is all obviously all a phenomenon that we've inherited from the apartheid regime, but obviously these are now becoming more deepened and more pronounced. Now, the president, in an effort to begin to address the challenges of the economy and job losses and to begin to cushion the citizens of the country, has, as you know, launched the Economic Reconstruction and Recovery Plan. And most people have heard about the plan, but most people actually don't understand what the plan actually entails. So could you speak to our viewers a little bit more about what the plan actually entails and what are the key features? And if we are going to be able to zoom into, if you're able to zoom into the issues that deal with job losses in particular, because we know that our viewers at home would like to know, especially those who have recently lost jobs, how do they recover from this and how do they even benefit from the Economic Reconstruction and Recovery Plan?
So this is the president's proposal, and it's titled the Economic Recovery Plan. And surprisingly, a day before the announcement of the Economic Recovery Plan of the president, there's a paper that I wrote co-authored with Professor Swilling, titled also New Wine into New Wineskin, an Alternative Economic Reconstruction Strategy for South Africa's Economy. So it's quite exciting that we were all thinking around how do we reinvigorate, South Africa's economy. But just to focus on the Presidential Economic Recovery Plan, it focused on 5 thematic areas, and those thematic areas are really around stimulus, around implementing growth-enhancing economic reforms. So what this would do, the president proposed that it should unlock investment into growth sectors, right? So these deal with mainly tourism related. Some of them are in the mining sector, but these are policy imperatives around e-visas that would be implemented and also enable the movement of people into South Africa and the easier movement of people so that you can grow a subsector such as tourism. The other example of the economic reforms would be to restore investment and exploration into the mining sector. So one of the proposals was to have, particularly around mining charter, is to make sure that the bill that is dealing with Mineral and Petroleum Resource Development Act Amendment Bill wasn't taken forward because of the uncertainty at the time that the president believes it brings to the mining sector. So these are just 2 examples that I wanted to raise that have been suggested in the Economic Recovery Plan. So of the 5 parts, so it's to growth enhancing economic reforms. The second is to reprioritize public spending to support job creation. Now, the reprioritization of spending, where you find that monies have been redirected towards health and education. The plan set out to reprioritize expenditure towards education and healthcare to around 50 billion. And also there is money that is being allocated to an infrastructure fund. So there are some areas where the state is saying, let's put more money in these subsectors. The infrastructure fund is the third element. And also, in order to address the pressing matters around education and healthcare, you'll see that, and you'll note in education particularly, the president announced at the time that they would execute not only allocation of money, but also have those jobs that would be created to try to ensure that there was certainty, particularly within the Department of Education, and those medium to short-term jobs that would be created so that South Africans would be contracted within the subsector. I think the last one was to invest in municipal and social infrastructure. These are the broad themes within the economic recovery plan that the president put in place. Now, if you now go underneath and answer the layer of, are these going to result in jobs? Are these going to promote, job creation? And I think the question then we would come in as economists to ask is, what are the requirements for you to enhance labor absorptive subsectors? So what we talk about labor absorpting sectors is, are these reforms that are being proposed sufficient to grow sufficiently and create an economic activity and stimulus effect in these subsectors where employment generation is high, particularly for what we call your low-skilled sectors, where people only have a matric or they may not have a degree. The majority of South Africans have low level of skill. So the question then becomes, do these reforms stimulate sufficiently manufacturing, agriculture, food production, food processing? And those are the type of subsectors you want to look at to ensure that you can actually enhance the economic stimulus and the recovery. And then we discuss that as economists to say, is it enough to address the problems and the ills that South Africa currently has? But these are the 5 thematic areas that are in the economic recovery plan.
Tell me, Dr. Moleko, I think that gives our viewers a better understanding of the key features of the ERRP. But at the end of the day, there's still issues around inherited structural arrangements of the economy, which government has obviously tried to deal with since 1994 until where we are right now. What would you say are some of the key structural arrangements of the economy that would make it difficult for government to implement, or for this plan to be implementable. And of course, if we're saying they need to be identified, it really is about making sure that they are identified in order that for them to receive the necessary attention, so that the plan becomes easily implementable. What would you say these key features are of the structural arrangements of the economy that require government's urgent focus and attention to get us beyond this point?
Urgent focus, number one. I wouldn't necessarily say it stems from the plan. The plan doesn't talk to it. What I always propose and emphasize is we have what we call domestic resource surpluses, i.e. we have massive surpluses in our pension funds, in our capital markets. In South Africa particularly, we've had the fastest growing compounded average growth rate for pensions over the last decade, comparably in the globe, not just in Africa, but in the globe for a specific period in time. So this talks to the kind of strength that we have in South Africa, potentially, and how we can use our capital markets to actually bolster our economic activity and economic reforms. A big problem that we have, which is a constraint inherited, is the financial markets being utilized to drive and advance national development. There's always what we know as a finance gap. And so this finance gap requires that we get capital inflows elsewhere to finance economic activity, to finance advancing growth, to finance productive investment, to finance the advancement of subsectors in the economy that are going to kickstart employment, that are going to kickstart, the multiplier effect across the sector divide in the value chain, both upstream and downstream. So what I would say as a constraint is this issue of financial inclusion and making sure that our finance institutions borrow to previously Black-owned economic participants, Black-owned businesses and SMMEs. What we have seen with the economic recovery plan, the president has announced the 200 billion guarantee scheme. One of the problems is that banks have not come on board to the extent that they have wanted. 200 billion has been allocated. Of that 200 billion, as of December, we knew that 16 billion has been used. So of the 200 billion, less than 10% has currently been allocated at that time. Perhaps it has gone up in January and December after we had the economic activity of the last quarter. But this is less than 10%. What the Minister of Small Business Development announced was that 75% of this money went to white-owned businesses. So the structural constraint in South Africa that you have is that the financing of development, the financing of economic agents, SMMEs, Black-owned SMMEs, the provision of liquidity and capital remains a constraint. So what we would propose is that we need to look at how do we recapitalize and reallocate to your development finance institutions in the same vein as you provide to your commercial banks. And so I think the issue of liquidity is a definite gap and an opportunity for us to restructure. Another proposal, I would say, which is a constraint, is the issue of oligopolies and cartels that control many of our subsectors. We currently have the Competition Commission, the Competition Act that guides the issue of what is known as the competition concentration in a subsector and what is known as dominance. I think what we need to look at is how do we ensure and enable in subsectors we don't only have 3 to 4, 5 players controlling the majority of our subsectors, particularly in the productive side. The reason why this is important, particularly in manufacturing, is that when you have oligopolies, it has a downside effect on both the supply side and consumers. Control of prices and entrance of new economic entrants becomes a problem, particularly because they control who enters, at what price they can sell goods, and they can literally squeeze their competitors out. I just lift those two and say, from a perspective of what you can do with regard to economic recovery, these constraints from an oligopoly, the management of subsectors, particularly in manufacturing, opening them up to previously disadvantaged SMMEs, opening up our financial and capital markets to lend and provide liquidity and capital to previously disadvantaged SMMEs and owners of businesses in these subsectors will improve the distribution of income and lessen inequality.
Thank you for that, Dr. Moleko. I think in conclusion, we obviously we only have time, a few minutes for a minute, in fact, just for one more question. And I think the most important thing before we leave our viewers is to just put into context for us the implementation of the plan. in terms of just measuring timelines for where we are right now, in terms of where we are right now as a country, the state of the economy based on the data and the intelligence that you have provided, what are we looking at in terms of timelines realistically? By when do you foresee that there's going to be, we can see measurable progress and a measurable shift in relation to these interventions? Because clearly the problem is not the interventions. The interventions are sound. The plan itself sounds like a sound plan, but ultimately it also comes back to the issue of state capacity and bringing on board all the relevant parties, all the relevant stakeholders, so that they can be able to all collectively play a role in getting the country, taking the country forward. So from that perspective, what would you say, reasonably speaking, what are we looking at? Because ultimately, our people are looking for hope, and we know the president will be giving hope a little bit later this evening when he delivers his State of the Nation address. But what would you say, just in terms of accelerating the implementation of the plan, what can be done?
That's a very, very necessary question. I think, one, it's very important for us to deliberate and to agree on the assessment of the interventions that have been done and the efficacy. What have been the outcomes? So what we would hope from the presidential SONA is to hear, based on what has been done in the last 12 months, particularly in the time of pandemic, have these interventions been successful? Have the stimulus packages led to economic outcomes? Have the recovery interventions led to a change in the investment pathways and the economic trajectory of South Africa's economic recovery? Have they led to increased and enhanced revenue? So these are the questions that our DPME, our Monitoring and Evaluation Unit, should be looking at from the economic cluster, together with what's happening with the monetary, trade and fiscal policy players. So National Treasury has this data, has statistics in regard to what's happening with output and economic output with the national accounts. We also know that Stats SA is collecting data regularly on employment outcomes and also activity in terms of trade across all the subsectors. So looking clearly at these, I think you are able then to monitor and measure whether or not the measurable impact has actually had a positive effect. What we have seen, though, in the interim from the last quarter is that all the economic indices point to inadequate improvement of these indices. Unemployment, economic activity, competitiveness, even business confidence is waning. What is worse is Fitch and other rating agencies further downgraded us after the medium-term budget policy statement. And what that says is that from the side of the assessment of the economic recovery plan is to say, perhaps you need to grow much higher. Our growth target is 3% and 1.5% and 1.7% in the out years. And I think the point that is being made is to say, we probably need to relook some of the drivers and the key imperatives in the plan. It's good that we have infrastructure. It's good that we are enabling growth in infrastructure, but the key economic growth ways, the path of making sure that we have revenue that enhances our debt to GDP ratio, make sure that our output increases, comes from industrialization, manufacturing, and making sure that you increase the value add coming from these key subsectors, but also looking at how you deal with the social constraints of having more than 10 million people unemployed. So I think what we need to look at key is how do we get the organization then of the economic cluster? Like the president has a National Command Council for the pandemic, we need the same type of an intervention to deal with the economic crises, the same kind of data management, the same kind of calling the ministers, the provinces, the premiers, all the stakeholders regularly, giving the nation feedback on all these key economic indices in the same manner that the pandemic, which is a health crisis, has been taken. I think from the economic perspective, if we took the same vein and took the same type of National Coordination Council on the economy, which is in crisis and has been for very long, if I might add, I think we would see very good results, monitoring of those actions and interventions. And I think some of the strategies need to be reviewed and some of the key points so that you can improve the import dependency South Africa has and the outward flows of capital that have been happening across some of the subsectors. But I'll stop there and thank you so much for having me. And I hope
Well, thank you very, very much, Dr. Moleko. That was very insightful indeed. And indeed, you have given our viewers at home a better understanding of the ERRP and perhaps also what to expect, and also just from a coordination perspective in relation to what government's role and of course the Parliament itself, the role that Parliament should be playing in ensuring that this plan, whatever commitments that the president is making, will be making this evening, become implementable. Thank you very much for that.
Thank you.
Viewers, that's all we have time for this evening. Thank you very much.